Just about to rock and roll. And just make sure I got everything I need. We're live. Thank you so much for being here. Whether you're watching this back, you're watching it live right now. Either way, I appreciate you. Thank you so much. Just talking about GameStop's earnings. So it's officially been announced of when the next earnings report will be. It's going to be 1 week from today, Wednesday, June 7th. Today is the last day of May. So it's been quite the journey. Here we are, almost halfway through 2023. This journey started for many individuals back in January 2021. So about 2.5 years now. And I think the company's made a lot of progress. However, there's still so much more to go. And it's really just about the long term. I feel like that's been said for a while now, but it's just really in this swing of a turnaround, in my opinion, because we're at a point now where the cost cutting has kind of been worked on for a while. It's starting to finish up. And it's like, okay, maybe the bottom line looks better now, but how are they going to start pushing the top line to also, it's going to carry the bottom line with it. But my point being, the way they're operating now is more efficient and it is solid. But in the next several quarters, you want to start to see, well, what takes them to that next level to really grow their revenue again. So I think we'll start to kind of see the company's vision for that over time. I've been kind of theorizing the idea of combining just their storefronts with the NFT marketplace, or just having something on the receipt incentivizing people to be onboarded to the NFT marketplace. Maybe the new GameStop Pro program is going to tie it in some shape or form. So we're going to really just keep an eye out for all that, or I am at least. Always do your research and determine what you want to keep an eye on. When the earnings report comes out, you should be okay, well, I'm very curious about like free cash flow and the cash balance, like just two random stats, right? I mean, obviously you should care about the whole report, but to highlight an idea of some of the specific things you want or want to specifically look at, I think is really good, and it just kind of creates that connection. So that's what I'm going to do in the stream here tonight. If you guys have anything or any thoughts or anything, definitely always drop it in the chat. But ready for earnings? Let's go. Jackson's, thank you for being here. Appreciate you. Fresh Maker, what up, what up? Thank you for being here. Whoa. Just popping. But make sure that all messages are on my side chat here so I don't miss anything. But yeah, going with the little pen and pad here. I have the shittiest setup, so I don't have a great place to write it. But just some things, and I'll kind of organize it after. I'll write as we go through here. So I would say cash equivalents and marketable securities. That's definitely relevant right now. I know I've kind of been talking about this endlessly, and I feel like you're probably, oh, Tetron, you always say this, but it's so important to have a good balance sheet right now in this high interest rate environment, because it really doesn't look like, in my opinion, interest rates are coming down anytime soon. If anything, they're going to rise. So to be able to use your cash to earn interest instead of chasing money that you need just to stay alive, I think we're really going to see more decoupling of AMC and GME over time, and other names like AMC that simply are not in a good financial position, nor do they have anything on the horizon that makes them appear to be. So when that's the case, I think we're really seeing now, and we will continue to see over time. And again, I don't give financial advice, so I'm just telling you what I think. But I think we'll continue to see cash flow into stocks like GameStop. And if you just look at big names such as Pepsi, Procter and Gamble, any company in good financial standing right now. I don't want to say Nvidia or Palantir. Palantir, for example, doesn't have debt and they're in decent financial standing, but they're just flipping to profitability. And look how much money is flowing in there. So while it's not the exact same situation, part of me does think, though, hey, well, if GameStop shows consistent profitability, it's a little bit of the same situation. However, Palantir stock is pumping because of the AI hype. That's definitely a factor in it. But my point is, I think part of it, and sometimes it takes A for BCD to happen, and I think BCD, like the hype in this scenario, point A is the fact that the company's bottom line is profitable, and they're like, yeah, we're putting out guidance expecting to be profitable from here on out. And that's been one of the downsides of Palantir. Like, oh, people are like, oh, it's not going to make that money. And I'm not a genius on it. I have friends that know much more than me. But my point is, I think the market started to see some money flowing in just because of the profitability, and the market is essentially rewarding profitability in a sense, or adapting, or I don't know, however you want to look at it. Maybe I'm not using the right words, but money is flowing out of certain stocks right now and then into others. So I really feel like those with a good cash position are in the best shape because they can continue to capture or take advantage of interest rates instead of be hurt by them. So with 10 minutes to go in the trading day, the volume was 2.8 million, and then end of the day at 4.2 million. Could not drop us under 24. Good observation, Jackson. So I haven't been keeping too much track throughout the day. Volume I used to try to always keep an eye on, but that's interesting. I did notice over time, it seems like there's always a bunch of volume just added on at the end of the day, and it's like, oh, is that off exchange, dark exchange, whatever? Why is it taking so long to like actually come out? I'm jacked for earnings. Just bummed I can't buy GME, but that time will come soon. I love GME. Can't stop, won't stop. Christopher Card, thank you for being here. Can't stop, won't stop, baby. That's how I roll. But yeah, it's one of those things when it goes up or when it's going down, you're like, oh, this keeps going down, but like at least I can average it down. And then when it's going up, you're like, oh, fuck, like I literally said I was going to buy more. I wish I bought more. Like that's how you get. And then you get anxious to buy, or I think that's just a general like human psychological thing. But to get back on topic here, and I really always appreciate you guys in the chat, cash equivalents, marketable securities. So right now I am just making a messy list of the key statistics for GameStop. Whoa, there goes my clipboard. Just make sure I'm all plugged in here. I think inventory is also going to be an important number to look at. And I'll kind of narrow down this list or decide what I want to do with it as I go. Like, as you guys know who watch this on any kind of regular basis or watch Tetron on a regular basis, I just go off the dome. I follow my thoughts. I just kind of speak out loud, think out loud. So, by the way, what I have on the screen for you here is Q1 2022 that was reported. So I expect cash to go up. They didn't even have marketable securities at this point in time because if you think about it, Q1 of 2022, what were interest rates? They were literally still zero or maybe just 1% because they raised rates for the first times in March 2022. So, or for the first time since cutting them to zero in March 2020 on an emergency basis. So it took them almost 2 years to raise rates again. And think what you want of that, and everything happening right now with the debt ceiling. It's that's a whole topic in itself. But the company now is having more marketable securities. Like I think we'll see more marketable securities because they could just earn more interest. And I think as interest rates continue to rise, like I'm really starting to become of the belief they will, just because of inflation, like catching up. I think a lot of people don't realize like how crazy this money printing is. And when you zoom out, like I actually was rereading some of the dollar endgame theory this weekend, and when you just zoom out and you think of all of human history instead of just your day-to-day life and just how the world is or how the world's always worked since you've been around, right? When you zoom out and look at like empires and the results of actions, some of the actions that were taken that are eerily similar to some of the actions going on now, it just kind of like, for me, it tells me like be ready for anything, just prepared for anything. And I'm not trying to be a naysayer in any which way. I'm just saying I think we're in a really unique situation where it's like people are like, oh, interest rates will never go over 10%. That would never happen again. It happened in the 80s. I mean, that was way before my time. So, or was it seven? No, it was the 80s, I believe. But that was way before my time, and obviously things are much different then. But we've never had a situation like this in America where there's this much debt, literally more debt than GDP now, and on top of it, it's in an interest rate rising environment. So how do you usually slow a recession? You usually cut rates and you implement monetary policy. But when you abuse it for just like a decade plus, even after 2008, one can only wonder what's going to happen. And I think just the same way an individual needs to be prepared, a lot of businesses need to be prepared. And that's why you see GameStop in the position they're in, and they're not going to just take on debt to explore a new avenue for growth. They might have had an idea of how they were going to tie the NFT marketplace and their storefronts together a while ago, but they didn't see the point in financing it at that moment in time. Didn't want to take on debt. Like these are all just some of the things I'm thinking about. But where I'm going with this as well is as they stack cash, and I expect free cash flow to be positive again, which it was not for Q1 2022. But if free cash flow is positive again, they can keep free cash flow positive. They really start to have a lot of power and decision making with their cash. Like, okay, well, how are we going to expand the brand name? Are we going to go out there and make an acquisition? Are we going to start going down a new segment of business? Are we going to buy back some stock? Are we going to start implementing a dividend? All these different decisions, all these doors are opened upon the company having a strong balance sheet. Because if they're just breaking even and they have like some debt they got to pay down and various things like that going on, and just overpriced leases, things of that nature, then it's hard for them to shift and pivot. And what I've come to realize over time is why Ryan Cohen and all these different guys got involved, and gals, um, what they saw was the cost cutting potential, in my opinion, the cost cutting potential and the strength in the brand name. And if you pull up, let's see, Ryan Cohen's original shareholder letter, let's say letter to GameStop board, when he basically wiped out the board and he was like, yeah, you guys got to do some stuff differently. What I think they saw was, or what Ryan Cohen is basically saying here is, if we cut costs and really just leverage the strength of the brand name and just operate more efficiently, there's a lot of opportunity with this company, because the only reason they're losing money is due to some poor internal decisions. So, hey, if I can get in there, take control of things, I'm looking for my next venture anyway, because I'm outside of Chewy now. I've have a couple other stocks. He's invested in, what is it, Wells Fargo and Apple. He's a big Apple shareholder. That's what it is too. Couple other names. Can't remember off the top of my head. But point being, obviously none of those he had control over. He was investing in to make his next business venture, so to speak. Whereas a full-on letter to the board, buying 10% of the shares outstanding at approximately 9.98 at this moment in time, it really told me, and I think was the perspective of Ryan Cohen, that there's a huge turnaround opportunity here, but the only way it happens is with me being captain of the ship. So that's why he wrote this letter in the tone he did. And I remember originally everyone was like, who's this guy, Ryan Cohen? I remember the first time Roaring Kitty, he was even in before Ryan Cohen, was like, oh, this Ryan Cohen guy, this seems awesome. Like, if you go back to like his first stream or video, whatever it was, I think it was a stream, but he's like, yeah, this guy's interesting. And that really got the ball rolling, because obviously this was mid-November 2020. At this point in time, he's buying shares in the back half of 2020. So I think it was starting July 2020 exactly, maybe June, but basically the back half of 2020. By January 2021, we all know what happened. Doubles that, not doubles down, but acquires another 100,000 shares in March 2022. So about 14, 15 months ago at this point. And since then, he's just held and hodled, or holded, whatever you want to think. But it's very interesting because you don't see a situation like this that often. How often do you see a stock explode the way GameStop did? And Ryan Cohen, a guy like Ryan Cohen, in his position with his kind of capital, could just move on to the next thing. Says, no, no, no. This is where I'm at, and I'm not selling anything. So I just think that's kind of interesting, like a little history recap there. I came across your channel from a rant. In your opinion, assuming costs have been minimized, what is the next biggest factor that prevents them from having positive EPS? Low, thank you for being here. Appreciate that. Appreciate Marantz. But I came across your channel from Marantz. In your opinion, assuming costs have been minimized, what is the next biggest factor that prevents them from having positive EPS? I would say the global economy and just overall people choosing not to shop GameStop. It really seems like as of late, the big difference maker is people choosing to shop GameStop. The example I always use is when I order stuff from GameStop, I always order like AA batteries, just because I know I'm going to need batteries and I don't want to have to go buy them just on Amazon or go to the store. I would rather shop GameStop. And while that's such a small, silly, minimal thing, it's just the mentality that I as an individual have, and I feel like there's genuinely at least 100,000 people out there that have that mentality too. Like, I'm gonna shop GameStop first, or maybe even just in the tens of thousands. But the passion behind the brand, I really think, is the difference maker. But if that spending power isn't there, like if their same stores aren't at least breaking even on their current revenues, I really feel like that's their biggest risk or biggest potential for EPS loss. Also, SG&A will be key the first quarter. I think they'll come in better expected because of SG&A. Christopher Card, I think you're absolutely right. They cut the Kentucky distribution center. That was pretty much finished up in Q1. The Florida call center closing down. That was finished up in Q1. As a whole, throughout 2022, if you're comparing Q2 2022 numbers versus Q1 2022 numbers versus Q1 2023, as a whole, all the cost cutting aspects that took place in 2022 are going to be able to be seen for this particular quarter. And then specifically more totally lost my train of thought because I was already thinking about the next thing I was saying. But specifically what beyond that, like the next thing I was going to say is marketable securities are going to mature and also boost their cash flows a little bit. And then you also have cash equivalents that could be in a money market account, could be earning interest. And if they were to announce something like a share buyback or a dividend, I don't think they would do a dividend right now. That really wouldn't make sense. Even a share buyback wouldn't necessarily be their best move right now. I mean, it really depends what you think. They could do 100 million. That's what it's still authorized under their current plan. But even just chatter of it could make a difference. And I really think how this report will look will be very, very different than 2023. What's your take on Icon and what's happening with IEP? Ryan Sung, thank you for being here. Honestly, I have not followed it that much, so I have to read about it a little bit more. But apparently, Icon's like, I'm going to do something that these guys will never forget. And I don't know, I do find it like sus. Like my gut feeling without like a logical perspective, like doing due diligence. So take it what I'm about to say with a grain of salt is what I'm saying. Is that Carl Icahn is in the right here, and whatever I mean, although I was gonna say Heisenberg, like Breaking Bad, but Hindenburg has a pretty decent track record, from my understanding. But at the same time, Carl Icahn's been around for a long time, and it doesn't seem like. I mean, I don't know exactly the claim. They said that he's illegally he's in like making the dividend look better than it actually is, something along those lines, because he and a family member actually own a huge majority of the shares that don't get dividends, so the dividend percentage is misleading to investors, something along those lines. But I don't know, it just seems a little bit fishy, but I actually don't think it necessarily has to do with GameStop specifically. I think it's possible it's some other like dots connected, as Morantz would put it, in how they're having this disagreement, or the reason Hindenburg puts out this report, the reason Carl Icahn's saying this is a bunch of baloney. I don't know. Honestly, I'm not too sure. That's the extent of my knowledge, but I'm curious about it. If you have anything else, let me know, or maybe I'll look into it a little bit more later. DRS, I can't wait until Wednesday, June 7th for Q1 results. Me too, Brett, and thank you for being here. I appreciate you. But yeah, DRS, man, it's book versus plan, right? I wonder, is this quarterly earnings report kind of made me think of a good point. So here, let's see, this was the first one it was on. Transfer agent. As of April 30th, 2022, 12.7 million shares of our Class A common stock were directly registered with our transfer agent. And keep in mind, this is when the shares outstanding was about 76 million. It was prior to the stock dividend split. But note right here, it was as of the end of the quarter. Whereas if you go to the annual filings, and the previous annual filing also had DRS, and it was like this: as of January 30th on the Q1 2022 or the 10K report for 2021 for GameStop, it said the amount of shares that were directly registered. So it's not because it was a 10K that it was different. It was just differently worded and dated, which I found really interesting. So I don't know if I explained that good, so let me help you visualize here. I'm going to pull it all up. Sorry, guys. Sometimes, anybody that watches knows I just kind of ramble, or sometimes my thoughts are like two thoughts ahead of the next thing, next two things I'm gonna say, if that makes sense. I don't even know. Sometimes I literally swear my brain goes faster, like, than I can speak, or my mouth goes faster than, or fuck, I don't even know. I'm just butchering it right now. Is it just me or Pulte getting unnecessarily too vocal about GameStop? Ryan Sung, I'm also glad you brought that up because I'm not sure how I feel about that. I've been busy with work, or like I can't always read everything all day, and everything started happening so fast that he's like, AMC and GME should unite. I don't know. I feel like he's just saying whatever. Like Pulte's just, in my opinion, like just from the little I've learned about him, he seems like a good dude. I don't think he has ill intention. But if this is as big as it's imagined to be, you would have to wonder, is somebody saying, talk about AMC now, or associate, right? Or someone's like tugging on some strings, or who knows, right? Who knows what's really ever happening out there? That's what I'm saying. Allegedly, allegedly, allegedly. I don't know. But I think he's just, from the perspective, like, this is my, again, just off top of my head, general thoughts. I think he's just like, you know what? Like, I just think, yeah, this is my vibe. Like, maybe I could just say this. Like, it should be fine. I'm just saying whatever. Let's check his actual, like, recent tweets. Let me see that. And then I am going to illustrate the DRS stuff, because that is also a number I'll be keeping an eye on. Pulte Twitter. Book King Brett. Hey, that's the way to go, Brett. That's the way to go. Got to be the Book King, as Ryan Cohen puts it. But oh, I have to check mine. Yeah, I don't know if I told you guys on. I think I did on the previous stream, but I don't know if everybody here was in this stream at that moment in time. But I went to terminate my plan a while back, and I didn't want to sell the fractional because this was months ago, and I wasn't fully wanting to sell any GameStop at all in any which way. So I was like, okay, well, I don't want to sell the fractional. So I terminated plan, but I canceled the sell order for the fractional. So now on my computer share, the terminate plan is gone. So I can't terminate the plan. So I called them like, oh, you just have to sell your fractional. I'm like, okay. And then as soon as I placed the order to sell it, it moves one whole share automatically from book to plan. And it's just like, why is that mechanism in place? And also, I bought a share of Nordstrom, and when I asked him, and I'm going to confirm it and make a video about this, by the way, once I actually see the dividend come in, I bought a share of Nordstrom. How can dividend reinvestment be on for my book share and my plan share, and then it's only reinvested into plan? Like, and the account number, you only have one computer share account number for book and plan. Like, oh yeah, it's filed in separately though. Yeah, but it's still in the same number. Like, when you've worked at a company internally, like, you just know. I mean, not that company particularly, but I mean, when you work in any kind of, I mean, I just have like a simple entry level finance type of job right now, but I know if it's if it's the same account number, it's all the same. Like, I mean, a computer share, sure, they could theoretically have their own thing, but that to me is like, huh. And then the dividend reinvestment and the heat lamp theory coming out saying, well, actually, every share of computer share is always registered in your name, but when there's demand for shares, huge volume day, which leads me to what I was saying before, and I'm going to stop bouncing all over the place. So so they have the transfer agent. Oh, shit. Okay. Is this the wrong filing? No, so this is the one where they changed it. This is the 10K. Proceed. There we go. Boom. They named, excluding the 228.7 million shares of Class A common stock held by Seed & Co. on behalf of the Depository Trust and Clearing Corporation or approximately 75% of outstanding shares. Approximately 76 million of our Class A common stock were held by record holders as of March 2022, 2023, or approximately 25% of our outstanding shares. And notice, this number is way after where all the numbers are reported. So if you look at the 10K numbers, they're all as of January 30th or January 31st. The DRS number and DTCC amount of shares is as of March 22nd, 2023. So why do they change the way that was reported where it always was this simple line here? So that makes me think, what is like the technicality behind this? Why was it written like this time? So what will it look like on this earnings report? I'm thinking it's going to look like this again. Um, but the heat lamp theory is basically saying, well, when there's a huge amount of volume on GameStop stock, like if you look at March 22nd, 2023, there's a huge spike in volume for GameStop that day. That would theoretically mean, as per computer shares terms and agreements, and by the way, go look all this up yourself. Go read the heat lamp due diligence yourself. Just type in heat lamp DD GameStop and it should pop up. But what it's basically saying is, well, it's like a heat lamp. So, it gets hot like on activation. So then the DTCC needs a lot of shares because there's a lot of trades that day. And that just so happens to be the day it's reported how many shares are in the DTCC and how many shares are in computer share. So if there's not a lot of volume on a day it was reported, the computer share number might be significantly larger, allegedly, theoretically. Whereas if it happens to be a very large volume day, the day of reporting, it's a different story because then any shares in plan can be loaned temporarily to Seed & Co. because they're in plan and they're not booked to the individual entirely. That's how I understand it. You can think differently. Let me know if I'm making an error on that in some shape or form, but that's the best way I can describe it in just simple off the dome terms. Let's see. Book King Brett, yes sir, this is deep. Sending people money to buy a stock sounds like they come back and bite his ass for Pulte. Ryan Sung, I was kind of thinking that honestly, and then he's like, "Oh, well, you have to buy the stock." Like, what if the person's like, "Nah, bro, I'm gonna just keep $200." What can he really do? Like, I don't know. I think he has good intentions, but like, I don't know. Maybe there's some things he can like type alter if that makes sense. For Pulte, yeah, I can see that. That's why his lawyers made him make disclaimer. That makes sense, Brett. That makes sense. I'm sure he has a hard-working team of lawyers, definitely, with everything he's doing. But oh, what did I just do? My side stream or chat stream. Wendy, what up? Thank you for being here. Appreciate you. Always pulling up to the streams. Oh, this is another number. Like just glancing through, I'm gonna try and make this list neater. Get more specific on the list. Probably actually type it a little bit later in the stream here, or another stream before next earnings. We'll see. But the store count, because seeing that they opened a new store in Milan, Italy, are they going to open a couple more stores throughout Europe to test this store concept? Maybe Australia. They have a pretty decent presence there. United States obviously is their biggest market, so will they open the same type of store? But also, I want to see why, like, would they say why it was Italy? Maybe that would be in their earnings report in some shape or form, or what they highlight in the Italian market, maybe. But I don't know. I don't think so. That's just an off the dome thought. And come to think of it, if they are going to open more stores like that, knowing the nature of GameStop, they're probably not going to say, like, oh, planning to open X amount of stores this year in Europe or United States. I mean, it's possible. It's possible. But they would maybe say something planning to renew leases with expansions on certain ones, something like that maybe. And that would be kind of interesting because to me, that would potentially be an indicator of more stores like Milan, Italy, experience-based, collectibles, board games, more higher margin items actually in the store, more incentive to actually have the foot traffic in the store. Because I feel like now with retail, in general, right? If you think about it, you need some kind of experience or reason to be there. Like you're not going to just go out of your way to go shopping. I mean, some people are, but I feel like anybody my age, like just a average dude, is not going to be like, oh yeah, let me go like stop at Kohl's. Like, you know what I mean? Like, if you need something on the spot, yeah, maybe. But I think a lot of people are just going to like order something online. So if there's an experience involved and like the passion that's behind gaming, like clothes doesn't have that same passion. Yes, maybe for some individuals, but I would say the percentage of people wearing clothes that are passionate is very limited because everybody wears clothes. Whereas the percentage of people gaming are that are passionate is very high percentage of all the gamers. So I feel like an experience being tied to it is really important and a really interesting side of what GameStop is and can do, and how the company can just continue to shift, because it really is about the experience and, in my opinion, Web3, because that seems to be what everything's going towards. And maybe Web3 won't even be called Web3 the same way I think NFTs won't necessarily become NFTs in the future. Those will be called like a digital collectible or your digital trading card, your digital like what ticket, whatever. But I think it might even have a different name, Web3, or there might be different categories of it, like, oh, like web gaming or something. I don't know. Maybe it's something like that. But it's still the point that GameStop's in position to take advantage because of the strength in their brand name. Of course, there's still going to be like those bitter people that worked at GameStop a long time ago or had a bad experience from old management and old practices, or like, I don't get anything for my games. It's like, obviously, it's just for like what do you expect to get rich off GameStop? Like, I never understood all that. Like, I understand the memes like about it's like, oh, we'll give you like $4.33, and it's like a giant stack of games like GameStop be like that's a classic meme, right? But I don't like if you're gonna bring in some like old ass games, like how much can they really sell them for? You know, it's mostly to just help you clean out stuff and at least get something. Same with like a garage sale. You don't do a garage sale to get rich. You do it to clean out. So I always laugh when people are like, "Oh, GameStop's stupid in 2023." Like those like weird Twitter comments are like, "They give you nothing for your games. Why don't anybody go there?" Like all this stupid stuff. And it's like, are you really still scarred from that? Like when you were a kid? Like, come on, bro. But I read an Italian article translated where GameStop said Italy made the most sense because they're historically known for innovation. Good looks, Silly Ape. Good looks. And thank you for being here. I appreciate that info. Not sure how much truth there is to that. I mean, it's still interesting tidbit, and it's like a little leak. You would like to think somebody heard from somebody, but then again, that's just allegedly, and that's just the media, right? Like, who actually knows? But that is a interesting aspect. Connor, thank you for being here. Do you think GameStop will be profitable? I do, Connor. I actually do. I think their cost cutting is not temporary. It wasn't just something we're going to see in quarter four. I think we'll see more cost cutting right now. But at the end of the day, if the quarter does fall up short and not remain profitable, I'm not going to be super disappointed or think, oh, everything's not going according to plan, or oh, they're in just such terrible shape, or anything along those lines. But I do think the way they've aggressively cut costs and, even taking action such as closing down the Florida Customer Care Center, which, keep in mind, they opened that under Ryan Cohen and new management in late 2021. So they had that for about a year and a half, and ultimately they decided to shift. But that's part of the growth and part of the process, in my opinion. I think that's actually in here. Customer care. I was in Florida. What was the name of it? Actually, a place I knew too, or I've heard of. Speaking of Florida, I gotta have Nathan from Florida back on soon. I've been meaning to hit him up. I'm just mad unorganized sometimes. I said I was gonna hit him up a while ago. I completely forgot, or I've just been completely distracted with shit. So, Nathan, gotta catch up with you soon if you happen to be here. Do you think we need to get more revenue with more stores closed down? Just wondering. Connor, honestly, I think at least sideways revenue is what we need, or what I'm looking for, because not a lot of people are spending aggressively on consumer goods. I think like kind of like I was saying before, the passion behind gaming, it helps, and the cost cutting absolutely helps. But if all in all, GameStop just stays flat on the top line, like I'm trying to get to the statement of operations here real quick. Oh, okay. Let's see. Operations. Let's see. Okay. So net sales 2022, 1.3 billion, whereas 2021 it was about 1.276. So there was a little bit of growth, but you have to think at that time a lot of money was being pushed into the economy. So I do think revenue will likely be the same, but I think the cost cutting is really a difference maker because it's really going to swing the bottom line. And I think then any upside of revenue is very exciting because it's like, okay, well, people really are shopping GameStop, and especially in a time period where you start to see some of these other retail names come out with earnings, and they're just simply not good, and inflation worrisome, consumer spending worrisome, Credit card bills are going up. Credit card debt as a whole just keeps rising. Savings are dropping. So just less expendable spending as a whole. You think, oh, let me go back. Do they, well, let's say, Ryan Song says they need to cut more dead stores in Canada because GameStop loses the most money in Canada. Ryan, if that's the case, then yeah, I think they do, honestly. And just try and prove, if they do ultimately do that, just go online, keep only the big primary stores in a mall, the good location where they can bring experiences, so people can still go to a GameStop if they want to, if they're in that particular area. But I agree, if those stores are losing money and they're not operating efficiently, they should wind them down and just try and really create a strong e-commerce presence in Canada if it's not already in good shape, which, as far as I understand, it's pretty decent. It's not anything out of this world, but it's also not like super slow service. Do you think there's any chance they'll buy back shares with big cash pile, like 50, 100 million buyback? Connor, I was thinking about that, but honestly, I feel like not yet because it's almost one of those things where, I mean, I don't have any reason to think they would think this, but this is just a perspective on it, if that makes sense. Almost the threat of them buying back shares, or just the capability of them buying back shares, considering how sensitive, like on paper, like, or the average person won't know, right? But people who really know, and people who really, really know, right, allegedly, know what's going on with the share count. So I feel like just, it's like a giant chess game. Just the threat of shares being able to be bought back, or the capability of the company to buy back shares, is really like, just that threat alone is relevant, because when they actually do, it probably will significantly benefit the stock if it's still this illiquid. So just having that bullet in the chamber, so to speak, I feel like is almost even more powerful. And right now they can continue to just stack cash with cash equivalents. And also, in tons of individuals just so happen to be buying the stock because they like it anyway. And it becomes in the hands of people who actually want to hold the stock, instead of people that are market makers or exchange traded funds, you know, algorithm trading, whatever it is. So I think that's kind of the perspective of why they don't want to mess with the share count anymore. They released some shares though to um, to raise cash, pay off their debt, make their balance sheet strong, and put themselves in the position they're in. But I think if they report another couple good earnings and they're still around this price point, then absolutely it's something we see soon. So I think it's something on the horizon, much more so than a dividend. But I also don't think it's around the corner, this earnings. But at the same time, if it happened, I have no complaints, because I think that'll really push the market cap upwards. Because they do still have, I believe, about 100 million under the current plan that allows them to actually buy that much worth of stock, and 100 million in cash for them is very little compared to the 1.4 billion they had as of last reporting. Ryan Cohen will probably stick to his mentor Vaden's advice and stay cash heavies during times like this. I think you're right, Ryan Sung. I think you're absolutely right. Cash heavy is the way to go, especially if interest rates keeps rising. As your GameStop, you're like, okay, well, we're waiting for the right moment to do exactly what we want to do. In the meantime, we'll just keep earning a bunch of money on our cash. So like right now, for me personally, I put 50% of my 50% of my checks go to my savings, because I get high yield savings through online account. And then if I move money into Fidelity, right now you earn about 4.7% interest on there. That's way more than you're going to earn in a checking account. So for example, maybe you have future student debt payment, right? If you're in college, or not student debt, but you have a semester coming up, like my brother's case, his semester coming up. So he has his money in a high yield savings right now, because he's like, well, I don't want to tie it up in something or invest it, because I know I'm going to need it, because he's going to pay for it. Like, he's been saving and working. So he's like going to pay for it, by semester. But he's like, in the meantime, I want to have it doing at least something. So he put it in an online savings account. So those are just some things to think about. And the interesting thing to me about business, since I've got involved in, or just read about whatever since I was younger, always interesting how like a business is kind of like, whether it's like a one person business or a gazillion people, a person is like a business is like a person, because they have an EIN, and that's what makes it, like, for on a legal, like, filing straight number standpoint, a business is a person. I didn't word that the best. Like, it's not obviously a business itself. It's not like a face, a human, but reporting wise, it's all under one EIN, just the same way you report through your like social security number, like if you're in America. So it's always been fascinating to me how it all flows through that, and it's all just the numbers. And then the numbers have always just fascinated me, and seeing the numbers of how derivatives markets work and call options and how these market makers have just huge exposure because, for example, I was rereading Peruvian Bull stuff over the weekend a little bit of the dollar endgame, and it talks about how a lot of these like massive funds, their net exposure is like 10 million, right? And let's say call contracts, but that might mean they have 110 million in call contracts and then 100 million in put contracts. So net, it's only 10 million, right? But obviously, it's various different contracts, and on top of it, and even if it is the same contract, just like 20 and 20, like each way, $20 call, $20 put. That's net exposure being reported most of the time and being worked with, but you have to think about gross exposures. They have $210 million there compared to 10 million. That's a massive difference. So just some small stuff like that is always kind of what's fascinating me with numbers. It's crazy. Like it's crazy how it all works. And the deeper down the rabbit hole I go and the more I understand about GameStop and these different things, it just blows my mind. It really just blows my mind, to be honest with you. But yeah, I don't mind them keeping cash and interest for 4%. They don't actually do bigger buybacks down the line. I think you're right, Connor. Yeah, because honestly, I think interest rates will keep going up. And if that's the case, then they're going to keep earning more. But at the same time, nothing's for certain. And I think part of why it's important, and I've come to realize this specifically with investing in GameStop, part of why it's important in believing in management and the leadership team is because you want to see them make good decisions. And in a uncertain financial time like this, you want to see them pivot properly. And I think GameStop paying off all their debt and stacking cash prior to all this kind of unraveling, because if you think about it, they raised capital in late 2020 by issuing shares. They had all their debt paid off pretty much by the time interest rates started rising. And they start all the cost cutting throughout the interest rates rising, where we're now getting to a point where a lot of these retail names are not reporting the best numbers, and then GameStop, ideally, hopefully, is going to report pretty good numbers in the sense they might just be flat on the top line, but we're going to see a huge swing on the bottom line, and it'll just kind of show the transition. But really, the top line is definitely an X factor. Of course, I mean, I could add that to my list of things of watching, but I think obviously that's a given. Um, but we'll see, and I think the passion behind people like always shopping GameStop really makes a difference because there's not many people that are going to go to the same store particularly. Like I think most people are convenience or like cheapest or whatever. For me, like I just think GameStop. And I think most people think that. I mean, that's just one small thing. I also think they have products people want and people shop for gaming. Again, it's like passion driven, so I feel like it's a lot of you're not necessarily thinking about your budget as much, or when you do have expenditure money and you're a gamer, you probably want to buy a game, right? So that's maybe where your money's going to go. But we'll see. And the collectibles category, that is definitely important to keep an eye on because that's just the combination of new product and just ever evolving product. Like, for example, Funko's a big partner with GameStop. Funko's always going to have more Funko Pops coming out. Like, there's ones you can even pre order right now. Damn, water chugging on the camera. But do you think there are other catalysts outside of our earnings balance sheet that could improve our stock price drastically? I think initially what I was just about to say there is an acquisition, but I'm not so sure because if you look at a lot of times a company gets acquired, the acquired company, usually their stock price rises if it's a public company, but the acquirer, if it's a public company, usually the stock price falls upon the acquisition taking place. But it really depends. And I think an acquisition really could be game changing. Maybe it won't have an initial effect on the stock price or be a catalyst for a big move. I think another insider transaction, especially Ryan Cohen, would be a really bullish thing to happen. Like if it's shareholder or board member I'm sorry, manager or board member just came out and bought a bunch of shares, like if Matt Furlong came out and just bought some shares, or another board member like Larry Chang was like, fuck it, let me just add some more. But Ryan Cohen, I think that especially caused shockwaves if he was like, I like the stock, and then he just bought more. But an acquisition could be very interesting, especially as the markets worsen. So, not to keep going back to the cash and strong balance sheet thing, but they can be in a position as other companies' market caps and valuations as a whole fall and they temporarily struggle because of the financial times we're in or whatever it may be. GameStop will be in a position to acquire the company at a much larger discount than whatever its valuation was in 2021 or 2020 prior to everything. So that might be something that could really move them forward because if it's something that's integratable into their business where they'll make good margins on it, like whatever it is, I really think one thing could be streaming, but I don't know what acquisition they can make with that. That's just something I think they can get into in general. But an acquisition, it would be cool if they bought like Funko, right? Because they already sell so many and then they could distribute them elsewhere. And I don't know the logistics of that. I think Funko actually does have a stock, but that's just like a random idea. But obviously, I'm not Ryan Cohen. I'm not Matt Furlong. I'm just spitting off the dome here of like a random idea. So one could only wonder, like with a small market cap like this, is there another name of brand that GameStop carries a lot of that maybe it actually makes sense to buy out that brand and then rebrand it to be GameStop? Like I don't think they would do that with Funko specifically because it's a pretty well known thing for a long time. But what if they bought out like a headset company, right? Like I don't know, like I mean I don't know, like not Turtle Beach or HyperX or I don't know, like I don't know their valuations, but my point is, whoever, whatever the technology is, whatever they see in it that they want, they can then acquire it and then rebrand it to GameStop, and I think that's also part of the strength in their brand name, and that could be something that just really drives things forwards over time. But in terms of other things that could improve short term, I really think just a big acquisition. If someone like a Kathy Wood, like a hype manager, bought shares, I think maybe that would raise some eyebrows. Not that I'm saying like, oh yeah, Kathy Wood's a genius. She'll be the best if she buys. I'm just saying like, I feel like anything she buys is like in the news, like, oh, she's buying Palantir. Palantir's pumping, right? Like, there's some things that kind of correlate, if that makes sense, or just some hype build around certain names that get invested in things at certain times. So maybe something along those lines could be a short-term catalyst. What do you think of a Funko buyout for GME? Oh yeah, Connor, I must. It's like I read your question without even actually reading it. But yeah, kind of what I was saying. I mean, it's an interesting idea. I'm not sure exactly what their balance sheet looks like. We could look at it for fun. Oh, okay. Took it. Control of it. I thought they had. How do they have a stock? I don't know. I'd have to look deeper into it. But it really depends on their debt. Let's see if Yahoo Finance just gives it to me as a whole in position. But I don't know. I mean, it also depends on their assets because you have to think when GameStop buys it, it becomes a whole subsidiary of GameStop. Everything that's Funko is then GameStop, and GameStop's really the pattern of leasing. They don't necessarily own. So let's say Funko owns a bunch of distribution centers of some kind, whatever it may be, it might not be assets that fit into what GameStop wants to do or does. Good revenue, but yeah, see, not a great balance sheet as a whole. Like just at a glance here, operating cash flow doesn't look good, but decent insider holdings. And this is always funny, right? How insider holdings plus institutional leaves like literally like a fraction of 1% available to the rest of the public, right? Sure. Interesting the way things are reported. Again, that's the net exposure type of thing. When there's just shares being loaned out, counterparty agreements, options contracts, you name it. There's all these fancy derivatives out there that like the public doesn't even see. It's actually just nuts that that's how it works. see if their revenue growth looks like. But also, you have to think if GameStop were to be interested in acquiring it, I'm not sure they're getting this number or what happened last year, what happened this year. But even if GameStop were to be interested in acquiring it, I think, like, I'm not saying just because these numbers, it's like, oh, it's done, they're done, they can never consider it. They have to think, how are they really going to like fit it in to what they're doing? And how could they rebrand the GameStop? And I think in this scenario, you can't. You just make it a part of what you do. Just make it like a feature. Maybe you have it in the Web3 space in some shape or form. But then also, they would have to look at should we just pay off this debt immediately, or like can we restructure it under the acquisition? What kind of assets do they actually have? Do they own? Do they lease? Could they then merge some of their operations already and just do it all in one giant like distribution center, like a new one they open? Like they'd have to think about all these different things. But again, this kind of goes back to what I was saying a little bit before, where if you have the right people in charge of the company, or you believe in the people that are in charge of the company, it's nice to feel like they're going to make decisions in benefit of the company that you own share in, because they own share in. So they want to make a good decision, good, well thought out decision of how to improve the business operations. Damn, ranted a lot today. I'm getting a crazy dry mouth. But yeah, thank you all for being here. 25 on right now. Much appreciated. Much appreciated. Should we look at a little bit of Pulte drama? Just gave out more stock. GME, okay. No reason AMC and GME can't unite on common ground. So much controversy. Look at all those views. DRS. It's interesting he's come out and said DRS. Like, I'm very surprised. Let's see. Oh, this bozo. Voodoo is available in more than 75 million U.S. households with more than 60 million registered users. Bet it's like all bots. Psh, of course she says that. Total denied. Writings on the wall. Sure. Alright. Too much AMC in my Twitter thread right there. But yeah, I don't know. I think it's one of those like, okay, I'm back to holding GameStop. Look at that smile. How can you not like that guy? No, I think he's all right. But it's people are always going to ask that question. Like people are always going to associate it because of allegedly, right? Allegedly, the common people talking about it together, like the same. I hold it both. Yeah, it's all the same play. They all move together. It's all the same. But one is not like the rest. It really is. Just when you look at the numbers, like that's why I like numbers. The numbers don't lie. One is not like the rest. Bed Bath, AMC, BlackBerry, any of those names that ran like big time in January 2021, none of them have made the moves that GameStop has. It's really that simple. So that's always a fun thing to think back on. And I just think, well, I know that I'm good. Company's going to do good over time. So I've really stopped even worrying about the same and people bugging about it. Like, I do agree, though. It's very annoying that it's just like, oh, hold both, hold both, hold both. Like, of people that don't know anything. Like, it's so ridiculous. And it makes someone like me, it's like, oh, you make YouTube videos about GameStop, and people just see those people and they just think I'm like some idiot, you know? And I like to think I at least half know what I'm talking about. No financial advice out here, just telling you what I think always. But yeah, so it's just interesting. But do you think Jimmy should try to sell snacks or drinks, like nothing major but little stuff, energy drinks, protein bars? Connor, that's an interesting point. Because really branding is a huge thing, and when you have a really strong company, like for example, Apple could come out with any product tomorrow. They could come out with like the Apple pen, and it's like the ink is like some premium fancy dancy whatever ink. It could be Apple like sparkling water tomorrow, whatever it is. And tons of people would buy it because they're Apple fanatics, and tons more would if it's in the technology category. But that's why I think GameStop would mostly want to do something technology based in whatever they launch next, whatever the product may be. And I think that's kind of why NFTs is the start point for it. But at the same time, I think it'd be really cool and it really could hit because of the passionate people behind GameStop. And I know I would definitely go out and buy this, and I think a lot of other people would. AMC did their silly popcorn that's losing the money, but GameStop could do something like, yeah, like I don't know, like a drink or just like a promotional like gamer juice, or I don't know, like make it even limited edition, and people would buy it as a collectible. I would, honestly. I mean, that's kind of what GameStop is to me, and the items on the NFT marketplace are collectibles, so and they have the collectibles category. That's a growing segment for them with big revenues, or I'm sorry, big margins. But reason I have Advanced Auto Parts on the screen here is because this is another retail name. I didn't even get a chance to look at the numbers. I just saw it fell a ton, but I kind of want to take a glance here. But it's just another retail name that just had it off day. Damn, AutoZone is a huge price. Yeah, and a lot of these car names, like car parts, had actually been doing really well for a long time. And you got to think they're retail, and I would say they're more essential parts, but let's see what the Motley Fool says. I don't even know. Like everything I read here, I take with a grain of salt because I feel like definitely people are like, why are you clicking on an article from the Motley Fool? But just to get a quick summary. But also, I could be asking Bard. I could be like, summarize this. Naturally, let's see. Its comparable stores declined. Expectations due to higher planned investments to narrow competitive price gaps and professional sales channels, as well as other unfavorable product mix. Okay. See, that's all I got from that. Pretty shitty article. It's like, what's next? Literally, I think Motley Fool articles are like AI generated at this point. I should ask ChatGPT, be like, did you write this? But yeah, see, the bottom line is suffering. Trying to see some other names. I know Targets was brutal. I remember I was looking at that one as well. See how they've done since. I mean, obviously they have a whole nother situation going on. I'm not even going to get into that. But damn, their stock has been getting crushed. Wow. Let's see, Walmart. Walmart's always gonna be strong. They're huge. They're like ginormous. The biggest retailer in America and worldwide, if I'm not mistaken. Actually, maybe not worldwide. Damn, that revenue's nuts. Crazy just at a glance. Wow, I didn't realize I had that much insider ownership. I don't really know anything about Walmart's history. Definitely I want to say something like it's really good to look at other stocks and become aware of how other companies do things and get other perspectives. But what, in my opinion, GameStop should really teach individuals, or what's mostly speaking for myself here, it's taught me, is you should 100% know the company before you put your money in. So you want to be really reading about companies just to have knowledge. So when you see one like, oh, this, like in the future, you want to invest in something else, you're going to see this one has something that I really, 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 really like, because I've read all these other companies and they don't have what this company has going here. And obviously I'm not going to say like, oh, I came into GameStop like that, I was analyzing forever. This channel has become a journey of understanding GameStop, and also I've put more money in as I've understood more, because I felt better about what I'm doing and more aware, and I'm not messing with call contracts like I used to at the very beginning of owning GameStop. Like I used to just trade calls and things like that, but I've come to realize over time it's really good to have just knowledge and understand. So I'm reading about other companies, not to necessarily start putting money into them at this time because I'm just working on some other stuff in terms of my finances, but to know in the future when I read about companies, be like, okay, well, this is a red flag because when I read about those companies, look what wound up happening to those stocks. Just things like that, they can kind of connect together. And also, maybe you're watching this, you're like, well, I don't have that much interest in that. For me, like I would say finance nerd. I like I'm interested in it. So like reading the numbers for me is fun. Like, and now I'm like, well, what do these other retail names look like? And also seeing Morant's, put out other videos about different stocks and how he looks at different things. Also really interesting. And I thought, oh, there's another GameStop YouTuber. who also talks about other stocks. You can't like be in this like I don't know if I want to call it conundrum or whatever of like you can't touch other stocks, but just know what is best for you is what I'm trying to say. And like I just think it's really best to be knowledgeable before putting your money into anything. And if your thesis is that GameStop is this huge underlying problem potentially, your thesis might not be to put money in other stocks. But for me, I'm just rocking the S&P 500 right now, GameStop, and I'm just chilling and I'm putting money into like my future type of deal. So that's where I'm at, but that's just kind of some of my general investing perspectives. But of course, no financial advice. Yeah, I know gamers love energy drinks, so that's kind of what I was thinking. Yeah, honestly, Connor, that's that's why I said it. I was like, it's just like a classic association, but it's kind of accurate. I mean, it's kind of a vibe. But I'm actually not really an energy drink guy. I'm a big coffee guy. But when I have an energy drink, I bounce off the walls. Like I had a vodka Red Bull when I went to Texas for the first time. It was crazy. I mean, I just not like oh fucked up. Like it was just like whoa. I'm like oh my god. Like, but yeah, it's funny. I always think of like Mountain Dew and like Doritos. That's what I always think of. Mountain Dew and Doritos, especially like a bright red or bright blue Mountain Dew, and then like spicy Doritos, like the purple ones. But all right, let me swing back to GameStop. God, the culture wars are everywhere. It's really also, guys, and I'm saying this, sometimes I say things on here really for future me, but don't overread about everything happening right now. There's so much craziness, and like, no matter how you feel, like, if you just read about it endlessly, it just fucking drives us nuts as people. It really does. And I really try to ignore it for that reason. But what I want to show you guys, and this is also something I've become aware of looking at other companies. So marketable securities, right? Keep talking about this. So basically, their marketable securities is August 2022. The company opened investment portfolios consisting of U.S. government treasury notes and bills in aggregate amount of $250 million. As of January 28, 2023, the investment portfolio's aggregate balance was $252.6 million, which was 251.6 million are recognized in marketable securities and 1 million are recognized in cash and cash equivalents on our consolidated balance sheet. So that 1 million means it's a term of less than 3 months because cash equivalents by definition is less than 3 months. Marketable securities, as long as it's under current assets, is within 1 year's time but more than 3 months. So it's probably all these are like 6-month bills for the most part, if I had to guess, which I believe have the highest rates right now generally. But those marketable securities, as they mature, where it's going to be recognized is, just going to get to it here, to the cash flow statement. See, here they are on the balance sheet. And statement of operations. Okay, cash flows. This was the purchases of the marketable securities, what they spent during the quarter. And then this is maturity. So this is when it's done. So 6-month treasury bills aren't paying you monthly interest. They pay at expiry. So if you have $1 and you buy one, obviously you need more money to actually buy a treasury bill, but you buy one 6-month bill, it's going to cost you, like if you buy it for $1, by the time it's done, and if the interest rate is 5%, it's going to be $102.50. So when you buy the bond, it's going to say $102, or I'm sorry, $1.25. And then it's going to, I'm sorry, fuck. I should use $100. So $100, if you pay 100, you're gonna walk away with 102.50. So $102.50 because it's 5% interest, but it's only a 6-month period. But you're not gonna earn that $2.50 paid to you. You're gonna give your $100, and then when that 6 months is up, you're going to go take 102.5, but scale that up to a couple hundred million, and that's what GameStop's essentially doing. So when the marketable securities mature, it'll be recognized under investing activities on the cash flow statement right here. So this is where it'd be the maturity. So as they're purchasing them, so you notice up there it said about 250 million was purchased in marketable securities, but it says right here that 276.8 were purchased and 27.5 were actually already matured or in maturity. So what that means is these ones here were bought and matured within the past quarter. So within that 3 months time since their previous reporting period, GameStop bought some marketable securities that were probably like 1 month, for example, which had, again, decently high interest rates, but they just expired relatively quickly. So the purchase is here and the proceeds were here as well. And then the 250 difference between these two numbers is the 250 on the balance sheet right now. So something I've really been trying to work on personally lately is connecting the balance sheet to the cash flow statement and really understanding like why it's interchangeable or what's happening is actually happening. And let's see proceeds from the French term loans. This is them getting more money from it, or oh no, sorry, repayments. Yeah, I was like, why would they get more? So this is when they took the French loans and they started paying a little bit. You know, it's a very small amount. Obviously, they don't have dividends anymore. I'm not sure what that little bit was right there. Borrowings from the revolver. They don't have that anymore. Settlement of stock-based rewards. So most of that was taking place in 2021 because this is the annual report I have pulled up right now. So a lot less of that going on now, which was also why this number was larger. Or I'm sorry, the net was lower of loss. Or fuck, I'm totally misreading this. It's so hard to read it sometimes. It's just tiny like this. So yes, no, that's just for the particular. Okay, forget it. Whatever. I already got the point I wanted to get there. But that is definitely something I'm going to kind of keep an eye on over time as the company continues to stack cash. But if they were to buy back stock, we would see it within here. I'm sorry, within financing. Yes, financing. It would be repurchase of common stock because this is the proceeds. See, this is how much they made from issuing shares. And then this was them paying off the remainder of their debt that was previously high interest. The French loans have interest rates below 2%. You said your grandfather works on Wall Street. What does he think of GME? Jeff, thank you for being here. And that's a good question. And that means you were here previously. I appreciate that. I'm still trying to get him on. I mentioned to him, and he said he's down for it, but we should have to make a day work. He's like pretty busy, and he's always kind of traveling and stuff like that. But honestly, he doesn't really believe in it, but he's more like, I just don't understand it. And like he's like, oh, it's interesting. Like I explained how the fundamentals are shifting, and you know, I explained some of it. Like he's a pretty quick guy now these days. Like quick with his answers, quick with so like he understood what I was saying, but he doesn't really like he'll see it to believe it type of thing. Or he's like, okay, yeah, no, I if you think and you have this thesis, like I believe that you believe it. But he's like, but I don't see like, and he's like, I'm not gonna go read into it, but because he's just retired, like he's relaxed. He's like, but I'll be very, wow, okay, like you were right, like type of deal. So I would say more so indifferent. He doesn't believe in it, but he's not choosing to do like a heavy analysis, if that makes sense. So he thinks like the perspectives are interesting, but he's also like, I don't know, unless they do something major, it seems like they're not in the right spot right now. And I was like, yeah, I mean, that is ultimately kind of what they need to do over time. But I was kind of explaining, I think that over time. And obviously, when I started going to like NFTs and stuff like that, he's like, I don't know about all that. And I'm like, makes sense, makes sense. But this guy is a huge time Pepsi investor, big time. So Pepsi's been doing well. So Tetron family's doing well as a whole. Tetron Invest. Hey, Almo, thank you for stopping in. I appreciate you. Hi, friends. Anthony G, what up? Thank you for being here. But yeah, I'm trying to think of some other stuff I should touch on. I guess I should go back to making my list, but you guys know how I go. I always start doing one thing and start going to the next. So they overpaid their taxes too. So this tax refund was pretty huge. Shout out to Morantz for that one. He had mentioned it. Cash paid for operating leases, leased assets obtained in exchange for new operating lease liabilities. Okay, so that's essentially the new leases they took instead of old ones. Curls related to property, purchase of property and equipment, 1.1. Oh, and one other quick thing I wanted to point out here. And yeah, obviously they're not really buying property because they lease most of their stuff and they don't really need massive equipment or not any machinery or anything like that. But cash paid for interest, this is like interest they owe, whether it's something on a borrowing or whatnot. But cash received, you might think, well, you were just saying like the treasury bills are just paying at maturity. But cash received for interest income is, for example, a money market account or a high yield savings. That would be the actual cash received for, or the interest received for the cash. That's where it shows up there because it's under like the supplemental section. Never really looked at their currency so much. This is something I have to learn at some point in time. I'm not too familiar with it. I mean, I could give it a general read, but, or I'm sorry, this is not, which one is it? Consolidated statements of equity. Yeah, I have to, like, I understand it, like the terms, but I have to really like understand. I feel like you don't really understand something until you can explain it. So that's also part of why I rock my channel, because I'm trying to be able to explain stuff. Or cash equivalents are carried at fair value and consist primarily of cash, money market funds, cash deposits with commercial banks, U.S. government bonds and notes, and highly rated direct short-term instruments that mature in 90 days or less. So yeah, kind of was talking about before. Glad it validates that there. Investments generally invest our excess cash in highly rated money market funds and investment grade short-term fixed income securities, which consist of U.S. government agency securities. Okay, what I said before. Our merchandise inventories are carried at a lower of cost or market, generally using the average cost method. Under the average cost method, as new product is received from vendors, its current cost is added to the existing cost of product on hand, and the amount is re-averaged over the cumulative units. Pre-owned gaming systems, other products traded by customers are recorded as inventory at the time of the amount of the store credit given to the customer. Okay, so that's not a huge too big of a part of things, and not a number I'm really trying to look at. But oh, shrinkage, let's see. Inventory reserves. Is that calculating shrinkage? Our ability to assess these factors depend upon forecast demand. Inventory is adjusted based on anticipated physical inventory losses or shrinkage and actual losses resulting from periodic physical inventory counts. So, okay, I like that. It says periodical. When I worked for Marshalls and TJX companies, they only did one per year. So doing it a little bit more often kind of keeps you more aware of the exact product count, because think about it, you're never actually counting every single item in a store. But if you don't know this, what retail stores do, usually it's an overnight thing, because obviously you're open during the day and you can't really be doing this, but they count every single item in the store at one given point in time, and then what is in the system of how much there should actually be is compared to what is actually in that store at that moment in time. So at Marshalls, you know how things always get a ticket peeled off? It was so annoying. Every single item had to have a ticket for this inventory event. So I think that's also why they kind of did it once a year. But that's something companies do, and just a random thing I thought I'd kind of explain here. And then that's where shrink comes in. It's like what you're missing from what's calculated to be as of the last shipment, as of everything that's sold, and items that are just in the system as inventory, which, by the way, why you need a good system such as SAP Retail Technology, which GameStop added, which wasn't there before, is so you can see these different things over time and say, okay, well, this category we're losing money on, or oh, this specific area has a lot of theft. This specific category we need to like put a lock on the games, or anything small like that. But yeah, again, just another tangent there. Let me get back to the list. Whoa. So yeah, I'll check also cash paid for interest income, because that kind of relates to everything I've been talking about. Maybe I'll make like a Twitter thread of this. Really, guys, I gotta commit more to this channel. I'm really trying to step up either my career or my channel. I'm gonna try and do both, obviously, but I really feel like my channel could be a nice thing because it's just documented as somebody who's just been an average person to hopefully someone to become a very educated person on all this stuff over time. Um, let's see. Anything else I want to keep an eye on here? Yeah, I want to keep an eye on the lease activity. I'll put that because they have a lot of leases that expire in 2023, so I want to see what some of the adjustments have been. Let's see what I want from here. Then I'm going to try to organize this. Okay, I'll say purchases and proceeds of marketable securities. Okay. Prepaid income taxes and income taxes payable. I don't want to keep too much of an eye on that. I mean, obviously I'm going to keep an eye on everything, but I'm just trying to pull out like what I think is the biggest factors. Okay. Yeah, so I would just say statement of operations as a whole. Yeah, I'll just write that statement as a whole. Merchandise inventories. Yeah, do I have inventory? Yep, I got that before. Yeah, so operating lease right of use assets is also in ties to their lease activity. So let me just add that here. And guys, I'm going to put this on the screen in a second. And then I want to have this so next stream I do, we can be okay. Maybe we'll make some predictions. And also when the numbers actually do come out, we'll be okay, let's highlight these and go through them. Operating rate of use assets. Okay. Tetron, good evening. Chad, thank you for being here. What up? What up? Kind of winding it down, but doing a little bit more. Getting a little tired, a little burnt out, a little ranty, but we're chilling. Okay. Let's go docs. Okay. Let's do a new one. New. Okay. All right. So, first, of course, we have to make it a nice fancy font. Let's do Comic Sans, because why not? 12. Double space. Or 1.5. 1.5. Make it watch. GameStop earnings. Let's bold this. Okay, we'll do cash and cash equivalents. Marketable securities. Inventory. And then yeah, what is it? Operating rate of use assets. Then we'll go as a whole. We'll just do as a whole. And then we'll do cash flow statement. Oh, what have I done? Okay. Oh, wait. Quickly. Do other. Do DRS count. DRS reporting date. I think I'm going to make a Twitter thread with most of it. But then I can't not put like revenue and all that stuff. So we'll see. We'll see. Maybe it's supposed to be a forced stream thing. And then what was the other one? Store count. Cash flow statement. We got cash paid. Interest income. Then we have purchases. Proceeds of marketable securities. And well, put lease activity as a whole here. Okay, I think these are all the main things I wanted to put on here. I mean, I might add to this or just to kind of have an idea of some of the things. Of course, you know, on the balance sheet, you're looking at costs as a whole, like the cost of the goods, general selling and administrative costs, definitely things you want to be looking at. But again, reason I'm putting cash and inventory and their leases, kind of just managing the balance sheet. Of course, you know, there's other aspects of the balance sheet, but those are really the ones I'm kind of keeping an eye on. So we'll see what happens. Tetron dropping the earnings knowledge. Windfall, what up? Thank you for being here. Dude, I'm just ranting off the dome, man. You know how I go. Yeah, man. Sorry I'm running late. Wanted to show support. You're totally good, Chad. You're good. No worries. Thank you for being here. But yeah, again, so these are just some of the things I'm kind of keeping an eye on. But that's most of what I got for earnings. Definitely feel like I'm getting rambly here. We looked at Pulte a little. We looked at some other names. But what I can pull up is some other stuff here. So shout out to Freshmaker for this one. He put me onto this. So Nexus Studios, which is AR Voyage, which basically is it's like Pokemon Go where you see items like in your real life, like through your phone. Like there's other items that are like three-dimensional from like wherever you're moving your phone type of thing. So I got this modern loft thing just to try it out. And basically you make your own place with your NFTs. And like obviously it's still in its beginning stages, but I just wanted to try it out. I don't think it's actually going to work because I'm on a shitty laptop. So it's probably not going to let me actually log in. But let's see. Let's try it. Because it'll work when I have nothing else running, but since I have OBS rocking, it's not going to work. Yeah, but it's pretty cool. If you want to check it out on the marketplace, it's called Modern Loft. See, collections metagates. It's by Protocol Gemini, and if you read about it, it's pretty interesting. It's basically gonna like bring people from world to world and really allow people to utilize their assets that are digital collectibles and not only maybe usable in the modern loft, but when they go to play different games, this might be like their stopping place from what I understand. Or I just kind of want to try it out. But just something cool to point out and just another interesting like low-key partnership. You don't really hear about it, but AR Voyage does have some interesting stuff going on. Nexus Studios seems a little interesting to look into them a little more. Get GameStop hold up here, of course. By the way, I'm trying to start doing giveaways or something soon, but I'm not sure what to do. So maybe I'll just even do $5 gift cards. I know that's kind of lame, but at least, you know, then people are going to shop GameStop. And if you get it, like, you maybe don't want anything crazy or just whenever you shop there next, it'll be nice to have at least 5 off, right? So, because I'm not out here making like big bread, you know, from YouTube, but I'm down to be doing a little bit of giveaways. So, start small. Obviously, if I grow more, make the giveaways bigger, but just something to throw out there. I've been thinking about it. Let's see, Nexus Studios. Who owns Nexus Studios? Let's see. Let's meet the team. Driven by the same passion for storytelling and craft shared across Nexus Studios, our film and episodic team actively seeks out the very best writing and directorial talent to realize their diverse range of products. Over the years, we have created award-winning work for the likes of DreamWorks, BBC Films, and Channel 4, to name but a few. Meet the team behind the magic. Charlotte Bavasso, co-founder, CEO. Christopher O'Reilly, co-founder. Diego. Never heard any of these people. Let's see. Charlotte DePasso. Side by side action. Let's see if she has any experience anywhere else. Tetron, long time no see. Are you streaming earnings? Ken, what up? Thank you for being here. It is a Wednesday. I think I can stream right after. I have to work though, so I probably won't be able to get on until like 6. So it'll probably be like a post earnings stream. I don't want to do all this. I don't want to do a puzzle. This whole thing. See if I can find any general info on her. Are there any ties? That's what I learned from Moran, so he's got to connect the dots. Oh, she hasn't tweeted in a very long time. Let's see if they've tweeted. See, they got some VR stuff going on here. Okay. Just trying to look for some general ties right now. Nothing crazy here. Yep, nothing really big here. I don't know. I don't know what I'd expect to find from the Twitter. But it's an interesting NFT, and it's just another like use case. It's not just some random loft. It's something you can actually go in, and I would like to think eventually I'd be able to have people there, and there'll be more interactive aspects and just more going on with it, and how it'll actually tie in with Voyage AR. I want to show you what it actually is. Let's go to the home. See, this is the one on GameStop. They have one on .core. I don't know what that is. See, what is a Metagate? How is it different than Voyage? Voyage AR is the name of the company, and Metagate is the name of the virtual spaces that we provide. A Metagate can be a room, an apartment, or even a whole house. We're always working on creating new Metagates. Is Voyage AR the same as Protocol Gemini? What is the relationship? Voyage AR is a service created by and provided by Protocol Gemini. If you'd like to know more about Protocol Gemini and its wisdom, head over to our website. What can you do with these? What's the point? You can decorate your Metagate, make your own, invite others to hang out and more. Where can I buy one? That was what was shown before. New features. We're constantly developing new features, improving metagates. If this is a feature you'd like to see added or bug that needs to be squashed, submit feedback here or reach us at support@protocolgemini.com. See the partners here. So Loopring, Core Blocks. Not that familiar with them. Cybercrew, I know them obviously. Ready Player Me. Ready Player Me is a cross-game avatar platform for the builders, creators, and residents of the metaverse. So the cross-platform aspect, I really think, is a big part of what GameStop's trying to do and gonna do. And really tying that together, to me, is a huge X factor, and making it simple for anybody to just play a game and go world to world, where it's all like easy for the consumer, easy for the individual. Nobody wants to do a whole hassle. Oh, connect my wallet to 5 different things just to get my assets to play this game, to do this. Like most people realistically aren't going to do that. So if GameStop underlying can make it really simple. They launched their own game client one day, right? Like these are all things I was just randomly think of. Like what if they did that? What if they did this? Like GameStop game client, and it was kind of like their variation of Steam, something like that. I used to say like, oh, what if Gmerica is kind of like that? But now we know Gmerica is probably just an NFT collection, but honestly, that's okay, in my opinion. I mean, it is what it is. It's just another brick in the building. So let's look into this more. Ready Player for Me. software developers. Let's see, apps, partners in games. Okay, see, they're involved in some stuff. Let's see, mini Royale Nations. What is this? But this is what it's fun to do sometimes, in my opinion. Just kind of go through random stuff and just dig at stuff and be like, well, what do we got here? This was the Reddit post on it also that Freshmaker sent to me. Let's see. Yeah, it was mine is pretty dope. I was yeah, this is what it looks like for those of you that haven't seen. So it's pretty interesting. Definitely different. I guess that's a cyber crew item, or is it? No, I'm not sure. Possibly a different game. But it's interesting. Let me skip through it a little bit. So just let it run. The pictures you can put. So you got the room chilling. You can put a plant, little office. So yeah, this is the process of like adding it. But I think this stuff will be cool too if people can just interact more and then hop right into their game from their like clubhouse with their friends type of thing. I don't know. I just think it has to be really simple, and GameStop has to make it really simple in some shape or form for them to really have the underlying pipes of the ground, like whatever you want to call it, like the gaming Web3 universe. Like, if they can make it really, really simple for people to just be onboarded, like just scan a QR code, do XYZ, and then you're good, and you can just easily play games and do different stuff really simply. I think that's game changing. And they just, if they could find a way to do that, I don't know if that's exactly the route they're going to go, but that could be very big because I think part of what they're trying to do is capture the shift into Web3. So how they could do that is with, simplicity and just into being the integrating partner and everything, if that makes sense, being the common denominator. Let's see and see. They put on their Twitter. I have that ready just in case. Polty said DRS. Polty, don't fall for the same plight narrative. Polty. Mad funny. It's like that Breaking Bad episode. It's a long journey, but finally arrived in Ukraine. Damn. Dollar Endgame Part 4. Creature of the Jekyll Island. I'll have to check that out. Crimey River. Credit Suisse notified by New York Stock Exchange it's not meeting listing rules. Wow, who would have ever thought Credit Suisse is not meeting listing rules? It's crazy. The heat lamp theory has been added to the super stonk library of DD art books and periodicals. That I want to check again. The heat lamp theory is very interesting. I think someone commented on my video I posted what it is. I'll send this over to them. Let's see, Joe, head of executive services, discussed the importance of a strong retail presence on equity markets and how the SEC's proposals will make it more costly and less efficient for retail investors to access the U.S. equity market. So this is also a huge underlying thing. And I think I don't even talk about it enough anymore. Maybe people in general, but again, I kind of just like to focus on GameStop and what they're doing and just my own process, my own journey, right? But there's a lot of battles going on with the very specific rules, like to the decimal point that trades are being executed, to the decimal point of the speed of the trades being executed by algorithms and market makers and all these different things. And it's a lot of like what Dave Lauer is talking about. So it's a lot of like I should try and understand that more myself. That's something I have to kind of get back into. But there's this huge disagreement, I would say, pretty much between the general person. And then you have names like Citadel, and there's other names I've seen it too come out and say, I can't remember specifically. I think like Virtues said it, mostly the market makers, but other just big name firms, right, as a whole. have said like, oh, well, you don't want, this is retail, this is bad for retail. No, we make it cheap. Like it's fine, but like really it's about the order flow, and the average person like myself would, I think, rather pay a couple extra cents per share because I'm investing in a company anyway, right? I'm long, or even if you're trading it, whatever. If it meant getting like best execution instead of just, oh well, there's a lot of, like, I'm not even explaining that in the proper way. As you can see, I need to do more knowledgeable research on it, and that's also why I've kind of moved away from saying like, oh, MOAS or like everything underlying, because I want to become more knowledgeable in the company. But I do think there's a lot of interesting things, right? Allegedly going on underlying with some of these names that have kind of a large net position. I'm sorry, a large gross position, as in they might have a gazillion calls and then a gazillion puts, but net, it's only like a few million. So it's like, oh, they only have limited exposure. But really, if you look at their gross exposure, like total calls, total puts, might be a different story type of thing. But that's also like generally speaking, uh, firms like BlackRock and Vanguard have their names in every name and every stock and huge exposure, gross, but then net exposure, not so much, but still massive exposure type of thing. It's your boy Tetron. Monty, what up? Thank you for stopping in. Appreciate you, man. But I hope you're doing well. But yeah, it is actually getting late. I am probably actually about to wrap it up. I'm trying to see if there's anything else good here. Prime for historic leap in face of short selling ban. What? Yeah, it's fine to take a small share. Halted e-commerce efforts in order to bolster its 4,400 brick and mortar stores. That's a weird article, but check that later. Gotta love Pulte sending to buy GME shares, though. I mean, yeah, I don't know what happened with Ortex. Also saw that just bumped to zero for the first time in like 100 something days of the utilization rate. But again, how much could that really be accurate? Like, it's all fugazi with how numbers are reported. It's so strange. But yeah, I think that's pretty much all I got for tonight, actually. So hope everyone has a good night out there. Just trying to think of any other last thoughts. I feel like maybe there's one other thing I wanted to touch on. Definitely the DRS count will be interesting for the DRS date. I'd kind of put that on here. And check this out if you haven't, the heat lamp theory. It's pretty interesting. User slash 6 days, 1 week. Pretty funny name. It's definitely some interesting stuff in terms of computer share and DRS. But yeah, DRS count and DRS reporting date. That's what I'm looking for, because all the numbers on the upcoming earnings report are going to be as of April 30th, 2023. But the DRS count might be as of June 2nd, 2023, right? Or that's this weekend, so June 1st. So we don't know, because the previous 10K that came out, which was the next quarter in progression, they changed how it was written. So let's see. Let's see what happens. I mean, that's only going to tell us so much, right? I think it's still going to be written the same as last time. Like I'll show right here for anyone that missed it before. Let's see, excluding the approximately 228.7 million shares of our Class A common stock held by Seed & Co. on behalf of the Depository Trust and Clearing Corporation, or approximately 75% of our outstanding shares. Approximately 76 million shares of our Class A common stock were held by record holders as of March 22nd, 2023, or approximately 25% of our outstanding shares. So it's like, why would the language change? Whereas here, it was, let's see, transfer agent. It was written much more simply each of the previous times. Just, hey, this is how many that are directly registered. So the whole DRS situation is certainly interesting. That is something that's for certain. The interestingness behind it is just, there's never been a situation where this many individuals are choosing to directly register their stock. So what will happen if, the company just breaks even, let's say for 2 years, but everyone just keeps registering and buying stock? Like, who would know? Who would know? I don't know. I mean, I think at some point the price starts to have very dramatic moves, and that's at the end of the day part of the OG thesis behind mother of all short squeezes, just massive demand upon little supply. So we'll see. I don't know. Those are just all random thoughts off the top of the head there. You know how it goes. But thank you guys so much for watching. Hope everyone has a good night.